Hello, it's David and Brent this week. It's the end of January, January 30th, 2020. Joining you this week to talk about uncertainty and what's on our minds. The first thing I have on the list this week is the latest Illinois USDA fertilizer price data came out, and hydrous ammonia prices is the one we're tracking the forecast network. They're staying stubbornly low, still less than $500 a ton. I updated a post on the forecast network showing some graphs. It's interesting because actually urea prices have fallen in the last few weeks, and hydrous has been steady, urea's fallen. So we're just not seeing any price movement out of that. So Brent, I've changed my forecast on this one quite a bit. I have to admit, I was really thinking there'd be a run at that $600 per ton last fall when we were talking about a big corn crop. I had a 70% forecast back about 6 months ago. I'm down to a 25% chance today. It could still happen. The question closes in May, so there's still a lot of time there. But we've seen a lot of price movements in the December, early January timeframe. We just haven't seen one. So I encourage everyone to look at their forecast, look at the data, probably some adjustments moving forward there.
Yeah, and I think the highest I ever got was like in the 35% range. But I don't follow that market probably as closely. It's kind of interesting. One of the drivers, I guess, is the oil prices, and for a while it looked like oil prices are going to go up, but seems like that stuff has settled down a little bit. So I guess looks stable.
Yes. So the other thing on my mind is you shared a link with me. You texted me a link about African swine fever vaccine coming potentially to the market. I guess there's been some studies, and encourage everyone to go read about this. It's one of those headlines where the headline might look really positive, but when you really start to think about the implications, it's sort of a long way from any reality. So there's been some testing in the lab. It's proven to be pretty effective. I think the quotes were 100% effective, which always sort of raises a red flag in my mind. 100% all the time. Leads me to a little question it, but that's what they're saying right now. But they need to do more trials, more studies. And so as we were talking about offline, it's a long way from commercialization and being ready to sort of prevent the U.S. herd or from contracting it or the spread to continue around the rest of the world.
Yeah, if you remember, I remember months ago when the South Koreans claimed they had a vaccine for it, and everybody said no way, and they didn't, of course. This one seems a little more legit in the claim that maybe they have found something, which would be really good news. But as you said, I think it's going to take a while to get that done and approved. I think even in China, and even once it's approved, it'll take a while to get. It's not like you can just go out and vaccinate them all immediately. So will be interesting to see, but potentially a pretty positive development.
Yeah. So you're traveling this week. So what have you been seeing and hearing?
Yeah, so I am at the Association of Ag Production Executives meeting here in Disney World, of all places. And last night had the chance to go to dinner with Thomas Honig, who was president of the Kansas City Federal Reserve Bank for 20 years, sat on the FOMC, was a voting member. I believe he was a voting member even in the financial crisis times, if you remember that. Very, very interesting guy. I always love listening to him speak because he is he's kind of an understated guy. He's not for all the things he's done. He's a pretty low key guy, and he can explain economics in a way you can understand it. So we had a great conversation. He did a great session today. Some of the things I took away from it. He talked a lot about the U.S. running two big things driving the economy in the United States right now. And one is the massive fiscal stimulus, the government spending lots and lots of money on fiscal stimulus, around a huge budget deficit. And he kept saying, really, you've got 70% of your budget is fixed and 30% is discretionary, but it seems like that part has been growing very, very rapidly and is continuing to grow. As a result, the government borrowing so much money, the only way that we've been able to keep interest rates low is the Fed had been, if you remember right, the Fed increased their balance sheet massively for quantitative easing. And they had decided that they were going to let those securities run off. Basically, the bonds get paid back and they retire the money. So they shrink the balance sheet, and they started doing that. But at the same time, the government is borrowing all this money. What happens is, you get rationing, or what we call crowding out. So the government borrowing starts to crowd out private borrowing, and interest rates rise. And so in order to prevent that from happening, the Fed's actually started increasing the balance sheet again. And his kind of assessment is that's likely to continue. He gave a pretty positive short-term outlook on the economy, basically saying, it all feels good right now. And the fiscal stimulus feels good. The low interest rates feels good. There's not much reason to withdraw it until inflation gets away. And there's just not many signs that that's happening. So his take was, you can kind of expect that for some time. And the problem is that it will end. And we just don't know when, and it will probably not end well. And it is a little bit concerning, I think, when you think about the longer term implications of what he was saying. And he was pretty clear about that. We've got tremendous inflation in asset prices, from farmland to stocks. Everything is up. And everybody kind of has a feeling that it can't go down. And if inflation were to get loose, probably the Fed's going to be under a tremendous amount of pressure not to kill it off for a while, because it's going to make things painful. And ultimately, when they do, it's going to be really painful. And so I think, optimistic outlook in the short term, long term, significant challenges ahead. But a really, really interesting discussion.
And, you mentioning that reminds me of what you told me a long time ago when the farm economy boom was happening. These booms end. It's how they end that's the question. And so we have this in the U.S., this fiscal and monetary stimulus going on. And what happens when we start to unwind that? It's going to be an adjustment period. And so there could be some changes there.
Could be quite painful. And he harkened back to the last time that we did something kind of analogous to this was in, the 60s. And it took a decade for that to kind of hit the fan. But it ultimately did, with higher rates of inflation and tremendous amounts of pain when the Fed had to readjust everything. And so, I think it's, as he said, this could go on for a long, long time. So no reason to panic right now, but longer term, something to think about. The other thing we talked about, which is very interesting, just the massive amounts of consolidation in the banking sector. And, money center banks, their market share today, it blows your mind. And what these low interest rates have done has allowed large corporations basically to lever up and buy others. So it's not so much that they've used low interest rates for new innovations and all this other kind of stuff, which is what we thought. Instead, basically what's allowed everybody to do is buy their competitors. And in banking, it's severe. I mean, the concentration of those top banks is severe. And interestingly, their capital ratios are lower than, say, a community bank. Why? Well, because community banks don't have the too big to fail guarantee. And, there's lots of issues, in the economy. So it was just a really, really good evening and a good session today.
Good. Yeah. The only thing I had left to chat about is an article in our random but relevant bucket of things. I came across it a week or so ago, and the title is reality is often, or the gist of it's, the reality is more complicated than we often initially think. And so the story starts off with this, the author was trying to build a set of stairs with his dad when he was a kid. And, you know, we all use stairs every single day. We have them in our houses, we have them in our offices, and we don't spend much time at all thinking about stairs. And then he goes into, I don't know, 400 or 500 words explaining all the things you got to think about when you're trying to put in the stairs and the main structural boards, and you got to get them the same angle cut, and you got to get them hung up correctly. And oh, by the way, no two boards are ever the same, so you got to like not only make sure they're the right angle, but actually make sure they're correct next to each other. And then he goes on to tell another story about boiling water and how we often take boiling water for granted, but if the pot's been cleaned, the boiling temperature is a little bit different. When is water actually boiling and when it's not boiling? There's some, bubble action that happens. My case, making macaroni and cheese for a 5-year-old, right? You sort of say, is it boiling yet? Is it boiling yet? And it's obvious, like not boiling and then is boiling, but when does it cross over? And so I just read that. I found it to be, it's a little bit of a long read, probably 10 or 15 minutes. But I got done with it, and I'm like, this is really what happens a lot in reality is that you say something like, I'm an agroeconomist, I help people think about the farm economy and uncertainties in the farm economy. But then you start digging into like, okay, what does that really mean? Or you're a producer, you're an ag lender. And what are the specific nuances of that reality that you work in? We were talking offline about how the USDA makes these big estimates or these census of ags. And it's sort of easy to look at those estimates and be like, oh my gosh, they're wrong. How could they be so wrong? Are they, is there some conspiracy here? They're trying to cook the books. And then you start thinking about, well, how would you go about sampling 180 million acres of corn and soybeans to get a yield estimate and estimate at the national level and then state level? It's a very complicated process. And so my takeaway from this is we got to kind of recognize, when are we simplifying reality too much? And then how much information is relevant to the decision that we're going to make. So sometimes it's just easy to peer into the abyss of complication and say, I recognize it's complicated, I'm going to keep my toe over here. Or sometimes you got to jump down the rabbit hole and actually know the nuances and the details. Yeah,
that sounds really interesting. And this is what you're saying just made me think of something. We hadn't even talked about we talked about the swine flu, but not the coronavirus, which is interesting. I saw a story on the news today said one of the most searched Google terms is the corona beer virus. There's a lot of people think you get this virus from the beer, which is interesting. Our society is devolving rapidly, I think. But, that's an interesting deal. Like, what is the ultimate impact of that going to be on the global economy? And how long is it going to take to get this under control? It's really, there's just so much uncertainty around that, right? I mean, you got the Chinese saying, well, you can transmit that when you're not even showing signs of the disease in the incubation period. The United States has said, not so fast. We don't believe that. Well, I mean, there's just a lot of uncertainty about that and what this could actually mean. But to put that in perspective, they're quarantining cities, 8 cities, almost none of whom I had ever heard of before, that are bigger than New York City. Yeah. It's crazy. I mean, it's a really interesting world. It shows us how much we don't know. Like, I'd never heard of these cities. They're bigger than New York City. And the thought of trying to quarantine these places, it's just fascinating.
So, yeah, the questions I think that the CDC is looking at now is how easy is it for you to catch the disease? And that's sort of one level. And then, what happens, what's the mortality rate once you catch the disease? And so they're watching that. And we don't fully understand that with this disease yet. You and I were even trading emails before. There's this big run for people to go buy masks for keeping yourself safe. Well, this article is pointing out, like, actually, like, there's two types of masks, and the mask that people are buying probably isn't going to actually help you. There's this other mask that you actually need. And so it's just this sort of reality is more complicated. You think, like, oh, I want to do these things to help protect me, and maybe or maybe not. So, like, there's a lot of nuances in those details, like building instead of stairs. It seems like, oh, I should do these things to help protect myself. But when you start digging into it, like, well, I don't know, like, what kind of gloves, what kind of mask, what kind of disinfectant will, a regular disinfectant kill the disease or not? So a lot of unknowns at this time. And I guess we also sort of have this initial wave of concern, and then we learn more about it. And so we kind of overhype it and we underhype it. And so it's finding that right balance.
Yeah. I mean, hysteria is running pretty high. I mean, so me coming to Orlando at the height of this thing, I'm like, well, if it hits anywhere in the United States, it's going to be here. I'm going to be here for a week. So maybe I should buy a mask and some hand sanitizer. So I go to Brighton, Colorado, outside Denver Airport, to Walmart. It's all gone. Like, there's no hand sanitizer available except the gigantic jugs, which I can't really take with me on my airplane trip, and no masks at Walmart in Brighton, Colorado, of all places. So I go to the grocery store, found 2 little jars of it, and 1 box of surgical masks was left. It's unbelievable. To me, people hate uncertainty, and the uncertainty with this right now is very high.
Yeah. So, well, any other things that are on your mind, or any forecasts you've changed this week?
These moves in the commodity markets are pretty big here lately, especially soybeans. And I'm going to be watching that one really closely and to think through what it means for the corn market, because the worse the soybean price gets relative to corn, and I believe that ratio is depreciated in the last
month,
couple weeks.
Yeah.
That tends to suggest more corn. And, we start planting 96, 97, 98 million acres of corn, and the chance of a high corn price is going to go out the window real quickly. So that's something I'm starting to watch and think really carefully about as to whether I need to adjust that forecast, particularly on the corn side. The bean side, I honestly am a little surprised at what's going on in the soybean market. So I don't really understand why we're going down so much, other than maybe it's related to this virus and everything else. But I'm trying to remain calm during all of it. I'll have to write some of this in my journal when I start making decisions, because we're going to have that journal thing up. Dave and I are bouncing it back and forth. I think that was one of the things one of the other speakers here talked about was, doing a journal. And he had run this Disney World resort for like 10 years. And that was one of, the things he valued a lot was, doing some journaling. So I found that interesting. It's a hot topic right now.
Yeah, tease this a little bit, right? As you're thinking about marketing or marketing decisions and grain prices, you put things that are on your mind today, you put this coronavirus down. And the question 6 months from now is, okay, was that a relevant factor in the market 6 months down the road, right? And you're going to be able to look back and say, oh, wow, I was thinking about this and I had a lot of weight on this, or I didn't put much weight on this at all. But you can connect the dots and see how that actually played out in reality, and how that departed from what your initial thoughts were. So I guess to agree with you, in my thinking about grain markets, I'm really focused on this 2020 acreage allocation. And I think we often think big acres in crops is because that crop is really attractive. So, we made a run at 97 million acres during the farm economy boom, and that was with ethanol, and things were really going gangbusters with the corn and good corn prices. And this year, we've thrown out the question 95 million acres of corn. That's probably in the ballpark of where it'll come at. And it's not because corn is that attractive on the budgets. In fact, it's sort of a break even or a little economic loss. It's that soybeans are looking worse, wheat's looking worse, and so we're going to make a really big run at a big corn crop without strong economic pull from corn. It's the push out of all the other commodities that's going to push that up. So sort of that, you mentioned a couple weeks ago, the snowball of all the other commodities difficulties pushing their way into corn and eventually dragging corn down with it. So I'm watching the acres. I think acres are going to be a really big question. And we'll start to set that crop insurance price window, right? That's February?
That starts in February, which is next month. Week. So yeah. So it's coming real fast, and that's always important. And like you said, I mean, I think, really important to just, try and make rational decisions and think things through, because especially through forecast, let's look at the data and make some good decisions. So anyway.
All right. Well, thank you all for joining us. We'll be back next week. Email us or send us any questions or thoughts or topics on your mind. Thanks so much.
See you later.